Hello, I'm Molly at Parker Walsh and I'm a licensed insolvency practitioner. So in this video I'm going to be talking about the do's and don'ts that directors should follow if their company is insolvent, i.e. they can't pay their liabilities as and when they fall due. So I would strongly recommend that if your company is in financial trouble, possibly heading into liquidation, you seek advice from someone like myself so that we can get an understanding of your company and give you bespoke advice. It's absolutely vital that directors during this time do things correctly, because if not, you could be personally liable and you could be disqualified as a director. So it's so important that you do things correctly. So speak to someone like myself. But generally speaking, what I would say is that as a director, you have a duty to protect the company assets. So you might have a company vehicle or plant and machinery, and it might be tempting to sell these for less than what they're worth in a quick fire sale just to get some much needed cash, possibly to pay a creditor. I would try to avoid doing this. The liquidator will handle the assets during the liquidation. And if you're selling them beforehand for less than the value, you could enter into what's known as a transaction at an undervalue, be personally liable, face disqualification. So try to avoid doing that. And then similarly, you will need to protect the cash at bank as well. So I know it's tempting to pay creditors who are, say, hostile or ringing constantly or threatening, they're going to take legal action. And I know it's so tempted to pay them because you're under a lot of pressure, you're stressed and you just need them off your back. And I get that. But what you might be doing is making a preference payment. And that basically means preferring one creditor above the others. So although one creditor isn't noisy, they're not hostile, they're still entitled to the same rights as the noisy one. So you've got to be careful that you're not preferring creditors above each other. Essentially, let the liquidator deal with the creditors in the liquidation if that's where the company's heading. That's what they're there for. That's what we do. Okay. And then I would also recommend, if you have any company credit cards, cancel those, or at least take them off the employees if they use them and don't use them yourself. You shouldn't be using credit at this time. If you've ordered any goods and they arrive and you can't pay for those goods, return them. You can't accept goods that you're just never going to pay for. You shouldn't be doing that. And then likewise, don't ask for anyone to do anything for the company. Don't instruct someone to do work knowing that you can't pay them. So you may have accounts upcoming that need to be filed at company's house, or confirmation statements. Don't ask the accountant to do those knowing full well you can't afford to pay them. So those are just some general tips. If you want to ask me any questions specifically about your case or want any more pointers, please get in touch. Okay, thank you.